Hi everyone, a very good afternoon and welcome back. You're watching the newsroom on ET now with me, Mubina Kapasi. Let's take a look at what the markets are up to as we speak. There was a sharp drop in the middle of the day in the equity markets, but we've recovered as well very rapidly with the NIFTY and the SENSEX back. Well, at least the NIFTY is back largely in the green with 0.1% of gains, 11,500 for the NIFTY. But the SENSEX is still just about languishing. It's in fact absolutely flat with a bit of negative bias seen on the screen at 39,070. Telecom is really the stock and the sector of the week because Vodafone Idea is packing in yet another 5% of gains. Remember, tomorrow is the all-important meeting, the board meeting where they're going to decide on fundraising. Vodafone Idea ahead of that is gaining about 15%. We also, of course, had that ET now exclusive story about perhaps the company is going back to the Supreme Court, for recalculation on the AGR dues. Further, ET as well has reported that Amazon, Verizon may be looking to pick up a stake. So lots of news triggers around Vodafone Idea, which is rallying 15% in trade today. That's definitely the big mover. Bharti Infratel again, and that's perhaps one of the stocks that's driving the NIFTY higher because that's rallied 8% in trade. A massive uptick being witnessed, like I mentioned, in the entire telecom pack. Airtel, though, is a bit of an outlier because it's losing around 1.8%. Apart from that, you are seeing Eicher Motors that's gaining approximately 3.8%. Even a Titan is higher by about 5%. Let's flag off the aviation names then. Indigo, for example, because we have seen a rally combine Indigo. Let's take a look at SpiceJet too. 1% higher for Indigo, 3% higher for SpiceJet, the two listed companies. This after the government has sort of eased certain restrictions with respect to flights. Allows airlines to operate at 60% capacity. Both of these stocks had actually opened with 4 to 5% of gains, but have cooled off from those levels, and they are the cynosure of all eyes. So all in all, if we have to summarize the big movers and shakers, it's IT and it's auto that are really leading the pack, but metals, energy, and the banking stocks yet again are down and under in trade today. Well, moving on, more stocks in news. Jubilant FoodWorks. Let's take a look at what that stock is up to as we speak. Yesterday, it delivered its Q1 numbers, and it was a bit of a mixed bag. The stock opened lower, but it's picked up quite sharply from the day's low. Shyam Bhartia, the chairman of Jubilant FoodWorks, addressed some analysts, some investors as well in the company in a conference call held yesterday evening. Listen into an excerpt.
That the business will continue to improve gradually over the next few months. We expect near normalcy by the exit of Q4 FY21. We remain excited about the medium to long-term potential of our category and our business, and we have no doubt that we will emerge from this crisis better positioned to participate in the opportunities that lie ahead.
Okay, well, time for an ET now exclusive. The Narendra Modi government is planning an oilseed mission to cut down imports and make the vegetable oil sector Atmanirbhar. India, remember, meets a staggering 70% of its vegetable oil needs via imports, which is valued at, well, 70 to 75,000 crore rupees. So what's on the cards? Let's go across to Karishma for this exclusive.
Well, the Narendra Modi government, as we pick up from our sources, is planning and mulling a policy on oilseed mission. Now, what is oilseed mission? In order to curb and cut down imports of excessive cooking oil and edible oil, the government is now planning to produce domestic oilseeds, that is, local oilseeds in the country. Well, this will save the country from the kind of 75% of imports imports that the country does in terms of getting oil to the country. In numbers, if we talk about, that's about rupees 75,000 crore imports that's seen on an annual oil year that government has to bring in. Now, what the government is planning and what the draft proposal talks about is, among various kind of suggestions and proposals the government received, government is mulling on diverting 25% of farmland of rice and wheat from northern parts of the country, that's Punjab and Haryana, in order to grow oil seeds, that is plant oil seeds. In fact, what's on the proposal is diverting the Kharif crop land in order to grow sunflower or maize seeds, and Rabi crop land in order to grow mustard oil seeds. Well, we know that in total our country utilizes about 23 million, on an average 23 million ton of oil in the country, and we currently are only able to produce 8 of it, and we import 14 of it. In case this passes on, this will of course get the Atmanirbhar push that the country has been working on. Prime Minister Narendra Modi and the BJP government have been very much focused on pushing the Atmanirbhar policy. 20 sectors, a panel that's already set, and this is the latest that's coming in on the edible oil note.
All right. Great. Thank you so much, Karishma, for that. So next on the cards is oil seeds or vegetable oils. Almost 75,000 crore rupees per year is being spent on importing vegetable oils. Okay, well, moving on, after getting the approval to acquire a big chunk of the Mumbai International Airport, now the Adani Group is planning to raise funds to complete this contentious acquisition. In fact, the group is planning to raise $1 billion via share sale, and in fact is said to be in talks, as per today's Economic Times, with 4 wealth funds, including the Qatar Investment Authority. So more specifically, it's Adani Airports that's looking to sell 10 to 20% holding by raising funds. So watch out as this essentially takes shape, a fundraising drive, of course, for Adani after making that mega airport acquisition. Well, Chris Woods of Jefferies believes that the worst is actually over for India. My colleague Vivek Iyer joins us now to essentially recap this latest note coming in from Chris Wood. Vivek?
Chris Wood, in his latest interview in the Economic Times, has actually said, and has given quite an important quote, he's saying that he will continue to stay invested as far as the Indian markets are concerned. He believes that the worst as far as the pandemic-induced lockdown, as well as in terms of equity market, he believes that the worst is over. What he also says is that as far as India is concerned, his understanding is that the net recovery rates are improving, and in fact he believes, even though the caseload is something that continues to rise, and this is something that he has also written in his weekly newsletters, he believes that the death rate in India is really low. The market is probably taking the view, according to him, that the worst has been seen as far as India is concerned. He believes that the lockdown was something that is a bit of a misguided policy. He believes that the lockdown should have never been imposed in the first place, and the lockdown was quite negative as far as the Indian economy is concerned. What he is saying, as far as India is concerned, he would continue to stay invested in India. He believes that there are better markets to invest. However, he does not think that the markets will go back to the lows of March that the Indian markets witnessed. He believes that the government, which has not extended the moratorium, this is a bit of a positive move, and he believes that the restructuring process is much more positive as compared to having a moratorium extension. At this point of time, while he is not positive on Indian banks, he is a little less negative. Again, the most important thing to watch out for is his long-term view on gold. He is extremely bullish as far as gold is concerned. He believes that the fact that the US real interest rates are expected to remain quite low, and he believes while in the short term gold can correct a little bit more, he believes that there was going to be a long-term bull market as far as gold is concerned.
All right. Well, a very optimistic view indeed. Thank you, Vivek, for taking us through those insights from his report. But Piyush Goyal at a CII event said that COVID and some of the key global events have obviously led to the downtrend in growth, or rather degrowth. But he believes that India shall bounce back in no time. Listen in.
I like the idea about capacity building also. In fact, amongst the other things you mentioned about skill development, retraining for the entrepreneur, for the staff, for the workers, you may like to look at mentorship. I believe, if I'm not mistaken, some of our very senior business leaders have gone into the mentorship mold. Possibly our Marico friend, Mariwala. Mr. Mariwala has gone into the mentorship mold. Some sense all these senior business leaders now have to let go to their children or to their professional managers to handle. And I think it's time that Mr. Anand Mahindra, Mr. Uday Kotak, all of them become mentors, not only to their own family and family businesses or their own empires, but also to these new age and young entrepreneurs. And they should allocate, it's not proper for me to say should, but I would appeal to them to allocate quality time, committed time. If at times they can even travel to the interiors of India after the COVID story is sorted out, it can really encourage. Imagine a Mukesh Ambani going to Gorakhpur and meeting the youngsters there. Imagine a Uday Kotak going to Tiruchirappalli and meeting the youngsters there. I mean, I've seen the energy Ritesh can take out. When I was with him in Bhutan, people were flocking to him like a film star. That's the power of all these big names. When they engage with the youth, when they talk to the next generation, it can be inspirational. It'll move people out of that, again, that old age thinking and that traditional government job mindset to start exploring the world.
All right. Well, moving on, you may have read about Silicon Valley, San Francisco reporting a whopping rise in empty homes as remote work allows more people to move to places that don't have a high cost of living, taxes, or of course the virus risk. Now, India's own Silicon Valley, Bengaluru, is nowhere as deserted as San Francisco. The number of empty spaces has been going up in the last few months as techies choose to rent homes outside the city. Chandra Shrikant finds out more about this trend in our special series Rebooting Bengaluru.
Indranagar, Kuramangala and HSR layout are residential areas that became major startup hubs in Bengaluru over the last few years. Several working professionals live here in PGs, co-living facilities and independent houses on a rental basis. However, with work from home and remote working getting an extension by several companies, a large part of this population has moved back to their hometowns, thus vacating their rented places. As a result, unlike earlier, when the vacancy rate in these areas was almost nil, now there are several empty spaces, with to-let signs coming up in many parts of the city and listings for rented homes going up on property websites.
We've seen that in San Francisco, that the city center residential is getting vacated. So what's the reason for that? And perhaps we're seeing a similar trend in Bangalore city as well. So I would say it's 3 or 4 things, Chandra, on this one is, the first is this is a trend which is largely in IT cities. It's not a trend, for example, that we're seeing in Bombay. It's a trend that we are seeing in Bangalore. You have spotted out the trend very, very accurately. The second is that this is largely a culture where it is work from home. And then, Chandra, work from home means that work from anywhere. So many of these IT professionals have gone back to their hometowns itself. And they're working from home, from those hometowns, and have unleased the properties that they had leased. There's no point when they can work from home, and home could be anywhere. So why do you want to continue to remain in the city center when you're really not going to go to the office? The third trend, Chandra, we're seeing is that many of these lessees, the tenants, are taking properties on the periphery of the city. They're moving from inside the city to say, I would like property, residential property on the periphery of the city on rental. I want a larger home so that I can continue to work from home with convenience. And this is what we're seeing in San Francisco as well. And that's the reason it's largely restricted to IT cities. It's where most of the companies are saying work from home. If work from home is back in a hometown, which is not their place of work, then they're going back to the hometown and hence de-leasing the residential property. Or, Chandra, really moving on the periphery, moving in the suburban areas of the city and saying is for the same rent that I was paying in the city center, I can get a property on the suburb, which will be much larger. And hence, I have a little bit more flexibility to move around and I would have a little bit more office space for myself, and I don't need to commute because I don't need to go to the office every day.
Apart from Bengaluru, this trend is also expected to play out in cities such as Hyderabad and Pune, which has a significant number of tech workers. Analog Research estimates that vacancies in Indiranagar and Koramangala has gone up by 15 to 20%, while in HSR layout, it is up to 15%. In terms of rentals, there are negotiations happening at individual levels. The average residential rental for a standard 2 BHK house of 1,000 square feet area in these localities hover between Rs 20,000 to Rs 25,000 per month. As for PGs and co-living options, the monthly rentals for an individual are between 6,000 to 15,000 a month, depending on the facilities provided. But now, landlords in Indiranagar and Koramangala are willing to renegotiate and reduce rentals up to 15%, while in HSR, it is seen to be anywhere between 10 to 12%. Bangalore's infrastructure was already crumbling before the pandemic, besieged by poor roads, traffic jams, water supply, and garbage woes. With more techies renting homes in the peripheral areas after COVID-19, it remains to be seen if the center of gravity will move away from India's Silicon Valley. Chandra Ashrikant, ET Now.
Okay, welcome back. You're watching the newsroom on ET Now. Market veteran Saurabh Mukherjee suggests the best bets to invest while the market sheds itself of COVID pangs. Listen in.
Three sectors where I think we could see a multi-year strong rally. First is auto. We're seeing blistering numbers in the auto sector. Initially, I think we were all fearing that June, July could be a flash in the pan. But through August and now I'm hearing even through September, demand remains strong. And if cost of money stays low, and my reckoning is cost of money will actually go lower, therefore auto loans become even cheaper still, we could see a multi-year recovery in auto stocks. They've been pounded for 3 years. Typically, auto in our country goes through 6-7 good years, 3-4 bad years. We're sort of overdue a recovery, and maybe COVID was the trigger that the auto sector needed for a strong run. So I think that's one straightforward sector one should consider. If there's a Make in India angle, then so much the better. The second is the lending side of financials, right? We've been saying for the last 3 or 4 months that what COVID will do is it'll crunch the balance sheets. It will damage the balance sheets of most of the PSU banks, most NBFCs, and therefore it will trigger a massive consolidation in our both banks and our NBFC sector. Even the best banks in our country are still down 15-20% from January, February. And as we get out of morat, go through restructuring, once we reach the end of the fiscal, I think the weaker lenders will start getting crushed, and therefore we start seeing a multi-year rally in high quality financials. And the third sector is the whole play around APIs, chemical intermediates. I think there's a lot of private equity money heading towards that sector now. And if the tensions with China continue, India will have to bring a lot of API manufacturing from China to India. We are almost entirely dependent on China for our API. That's not sustainable from any perspective. And therefore, I think we're heading into a multi-year boom on API manufacturing and the entire ecosystem which feeds into API manufacturing.